Good afternoon. I'd like to welcome you to the Cost Accounting Basic Training Workshop. Research is what I'm doing when I don't know what I'm doing. And by using this definition, I think we can all say that we have performed research at one point or another. Cost accounting, the most exciting department on campus. Cost accounting deals with grants and contracts for sponsored research. MSU had $175 million in sponsored research for FY18, and it had $180 million for FY17. My name is Cully Carpenter. I have almost 25 years of accounting experience in 3 different areas. 16 years in private accounting. Positions included staff accountant, business manager, and controller. 1 year in public accounting as a tax accountant. And then 8 years in governmental accounting as senior cost accountant here at MSU and an interim tax compliance officer. And also I've been a licensed CPA for over 22 years. The agenda for today includes an overview of cost accounting, highlight the various tools and forms on the cost accounting website, discuss cost accounting FAQs, explain MSU's unallowable cost procedure, and finally have a Q&A session. Since cost accounting deals with grants and contracts, it serves both the pre- and post-award departments. As you can see from this MSU organizational chart, cost accounting resides between the Office of Sponsored Projects and Sponsored Program Accounting. Cost accounting has 4 areas of responsibility. The first area is uniform guidance. The second is facility and administrative cost rate proposal. The third is the CASB disclosure statement, and the fourth are service centers. And also these areas are listed on the right-hand side of the website, and by clicking on these tabs you can go to the specific area you're interested in. Let's review these 4 areas and the website. The first area of responsibility is uniform guidance. Unfortunately, this is not what I'm referring to. The uniform guidance provides a structure that ensures the federal government and other sponsors pay a fair share of total costs. Uniform guidance combined 8 OMB circulars into one document in order to reduce administrative burdens and to streamline requirements for grants management. The effective date of the uniform guidance is December 26, 2014. And since it was the day after Christmas, the research world likes to think of uniform guidance as a Christmas gift. Uniform guidance has 2-fold purpose. First, it determines which costs are unallowable and allowable. Then second, if allowable, whether the cost is indirect or direct. And there are 3 things to remember for costs to be charged to sponsored projects. The cost must be allowable, the cost must be reasonable, and the cost must be allocable. The second area of responsibility is the preparation of the Facility Administrative Cost Rate Proposal, also known as F&A. The F&A cost rate proposal helps MSU recover a portion of indirect costs spent for sponsored activities. Examples of indirect costs would include depreciation, utilities, and departmental administration. The F&A cost rate proposal is negotiated every 4 years with our cognizant agency, the Department of Health and Human Services, or DHHS. FY16 was our last base year, and after preparing the proposal, our numbers came in lower than the FY12 proposal numbers. Therefore, we requested a 4-year extension of our current rate, and this extension is one of the new benefits of the uniform guidance. Here's the negotiated F&A cost rate agreement. And notice I said a portion of indirect costs are actually recovered. It's usually less than half. MSU's current F&A rate is 45.5%. This rate is reduced even further due to sponsor limitations and waived F&A. Waived F&A requires VP approval according to the Office of Sponsored Projects Faculty and Staff Guide. Therefore, it is strongly discouraged. MSU's effective F&A rate is 33.13%. Recovered overhead is distributed according to MSU Policy 80.12. This policy is located on both the Office of Sponsored Projects and SPA Accounting's website. The distribution percentage is different for each of the 3 divisions. For the Division of Research, 44% goes to the General Fund, 19% to ORED, Office of Research, and then 37% to the Generating Unit for the total of 100%. The second division is MAFIS, Extension and Forestry. The division receives 50%, the Generating Unit receives 50% for a total of 100%. The third division is the College of Vet Med, with CVM receiving 40%, the Dean of CVM 20%, and then the Generating Unit 40% for a total of 100%. And to put a dollar amount with recovered overhead, please look at this chart, recovered overhead for the last 7 years. The average recovered overhead is $17.3 million. It's a pretty sizable amount of money. The third area of responsibility is to maintain the Cost Accounting Standard Disclosure Statement, also known as a DS2. The DS2 compiles all of MSU's accounting practices into one document. And the DS2 also must be approved by our cognizant agency, the DHHS. The fourth area of responsibility is to establish and review service center rates. Service centers function as nonprofit businesses that fund operations through fees from users. Those users are primarily university departments or sponsored projects. MSU currently has 33 service center funds with a combined expense of almost $16.2 million for FY18. Now, unfortunately, there's a very limited amount of guidance for service centers, and we actually only have 3 sources that describe the accounting for service centers. The Uniform Guidance, the second one is the National Institute of Health FAQ, which was dated April 8 of 2013. And the third is a summary report on audits of recharge centers at 12 universities issued by the Office of Inspector General of the DHHS in January of '94. And there are 5 principles that we can glean from the authoritative guidance. The first principle is rates must be based on actual expenses. The second principle is the goal is to break even. The third principle is the goal is to break even. However, we are allowed 60 days of working capital. The working capital definition here is different than GAAP accounting definition, which is current assets minus current liabilities. The working capital definition here is annual operating expenses divided by 360 days to derive a daily expense, and then we multiply that times 60 days. And that's the amount that we are allowed to have on hand. The fourth principle is to recalculate the rates at a minimum of every 2 years. The fifth principle is subsidies, if any, must be included in the rate calculation since subsidies reduce actual expenses. And also, the Office of the Controller and Treasurer offers advanced service center training each fall that explains these principles and concepts in more depth. And this training is required by internal audit for service center directors and business managers. Please start watching your inbox in the fall for the Advanced Service Center Workshop announcement for the training in November of 2019. And also, speaking of training, the slide deck of these workshops are located under the Training Material tabs on the Cost Accounting website for future reference. The top 3 cost accounting FAQs. The first one is which F&A rate do I use, which function, and do I use the on or off-campus rate? Remember the negotiated F&A cost rate agreement. We actually have 3 different F&A rates, one for each function of the university, one for organized research, one for instruction, and one for other sponsored activities. And also we have 2 rates for each function, one for on-campus and one for off-campus. And the on-campus definition here means MSU owns the building, and off-campus means MSU does not own the building. It doesn't rely on the physical location. Since a greater than 50% test is used, which function is greater than 50% of the salary and wages being charged to, and is the building owned by MSU? The answer to these questions will help determine the correct F&A rate to use for your sponsored project. The second cost accounting FAQ, I charge for services to other departments. Does that qualify as a service center? Well, it depends. It needs to be an ongoing, not a one-time charge. Service centers require a lot of compliance work. Remember the 5 principles? And then the third cost accounting FAQ, can I include the purchase price of equipment in the service center? And the answer there is no. You can only reserve an amount less than or equal to the annual depreciation expense in a plant fund. Back on the cost accounting service center splash page, we have an unallowable cost procedure. You can see the word allowable is actually highlighted in red. If you click it, it'll open the PDF file. The unallowable cost procedure was adopted in August of 2016, and the unallowable cost procedure is also posted on the sponsored program accounting website. Uniform guidance requires written procedures for determining the allowability of costs in accordance with Subpart E, cost principles of this part, and the terms and conditions of the federal award. This procedure basically restates the costs identified in the uniform guidance and whether they are allowable or unallowable. The award's terms and conditions would prevail regarding if a cost is allowable or unallowable. If the cost is not identified in the award's terms and conditions, then uniform guidance would prevail. Some examples of unallowable costs would be alcoholic beverages and entertainment costs, i.e. football tickets. So in conclusion, we had an overview of cost accounting. We highlighted the various tools and forms on the cost accounting website. We discussed accounting FAQs and explained MSU's unallowable cost procedure. And here's my contact information that's also located on the cost accounting website, and prefer email. Thank you.